Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for a market recap. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. Okay, guys, so let's just hop right on into the charts. So starting off with the Dixie, as you can see, we are actually currently potentially building out that higher low pivot that I've been talking about over the last couple, days, weeks, etc. So far we're having a very nice day on dollar after a very weak day on dollar yesterday, and what this is likely going to produce is a consolidation that may end up leading to like a rounding sort of structure here, and that's what you want to see if you're looking for upside on the dollar. Okay, so we had this nice trend down, then we had a nice pop up taking out these highs here, taking out these highs here. So we had a change of character, then we break down again, and instead of taking out this low, we make equal lows. Okay, then we go up, make another high, but this time it's a lower high from this high here. So what does this start to create? Everything I've been saying over this period of time, we're going into a squeezing structure. So that's more of like a volatility contractual pattern. So some sort of triangle, wedge, whatever you want to call it. Point is, we're starting to squeeze here, and if we have a higher low forming here, what that does is it creates a scenario where it's very likely that this squeezing structure is coming to an end, and we're likely going to have that move to the upside to test the daily downtrend line. So the probabilities are increasing for more upside in the dollar if this confirms as a higher low pivot, and it increases the probabilities of this daily downtrend line eventually breaking bullish and making its way back towards the monthly bearish fair value gap. So I'll move back towards the 106 to potentially even higher, 107, 108. Okay, so we are coming close to that time. We are still in the consolidation. So in this consolidation for the dollar, there's going to be a lot of upside found in all the markets, all the risk on assets. But the moment this starts to trend up and starts breaking out, you may start to see more pressure, sell pressure, coming into the markets, especially on the risk on assets. Okay, so we'll keep her on the dollar. So far, it's been following our general thesis of a squeezing structure that has a bull bias. All right, let's take a look at the U.S. indexes. Let's start with the Dow. So Dow, coming off of this bearish fair value gap and still slowly trickling down, but notice how slow it's been, closing above the lows of yesterday, and then today it looks like it might be doing the exact same thing. So very lackluster move down, which is a good indication of demand, right, of strength coming in, holding this, and it really makes it likely that we're going to see some sort of higher low structure build here, whether it's right here, maybe it comes down a little bit lower. In the end, it's likely going to hold, and we may get another run up back to the 34,500, 600 area, maybe even higher towards the top of this bearish fair value gap to really challenge this high wick right here and go after about 35,000 almost and grab the buy side liquidity above that level. So we are looking good for potential more upside, but this will stay in this scenario. This scenario will remain as long as the dollar doesn't strengthen heavily very quickly. That will only happen if the dollar starts to break through that squeezing structure where you just went over. But if we stay within that structure, we continue to mature that structure out, or I should say that structure continues to mature, we'll find that the Dow will likely have some more upside in the near term here. Okay, next is the S&P 500. So let's pull that out here. So S&P, similar to the Dow, very slow. No major volatile moves here today. Very slow. Just respecting the general liquid zones here, and so far is showing some nice upside here. Little buy up here. We'll see if this confirms as a pivot. If tomorrow maybe is a bullish day as well, we'll have a new little pivot here. But in my opinion, it's looking like consolidation is coming for the S&P, and we'll see if it has a bull bias to it. It will likely have a bull bias to it if it consolidates, going sideways or slightly, grinding down, something like this. But if we do see, let's say, price action, pops up like this, and then we start doing something like this, then you want to be very careful, because then you're starting to look at like an upward wedge structure. You're starting to look at smart money is tricking the dumb money to start buying, looking for a breakout here, and it'll likely lead to a pretty sizable move down for the S&P. So we'll have to wait and see how this matures out. But overall, I do have a short-term bullish bias because of where the dollar's at and how everything's looking. Next is the NASDAQ. So NASDAQ, again, very similar to the S&P. Actually, it's extremely similar to the S&P, but because of its nature, because of how much risk on assets, namely the tech, is in this indice, you're seeing it a lot more exaggerated in the candles, right? So, SP had a nice buy up, but the NASDAQ also had a nice buy up, but it's a little bit bigger just because of that. And so far, it's just going sideways, in my opinion. You're likely going to see this go sideways, just like you would with the S&P, and it will have a bull bias. Now, the NASDAQ is overextended relative to the other indices, but it will go up if they go up. It doesn't matter how extended it is. It will go up if they go up, and it will go up as long as the risk on assets are still seen as the place to be. Okay, so NASDAQ looks incredible. It's definitely exceeded my expectations with this move up. But overall, I do see some more upside potentially coming back up towards like 15,500, back towards this bearish fair value gap. But we are coming close, potentially, judging based off the dollar, where we will see some selling into the markets, and that will probably lead to the NASDAQ having a pretty sizable correction down, which again for the NASDAQ is fine. Its move has been ridiculously strong, especially relative to the other indices. So if it does break down, I mean, we're looking for a move at least back down towards the orange zone. That's where I'm looking for the first place for major demand to hit the NASDAQ again. Okay. All right, now let's take a quick look at oil. So let's pull up oil here. So oil still trading within this zone, and we're going to keep trading it here. Okay, we're going to keep trading here like we have been for so long. And in my opinion, we're still in this grind here. I don't really have any opinions on whether it's going to break up or down, let's say, this week or next week. It's not really relevant. What we want to watch to see is how this is going to form as more news comes out of Saudi Arabia, and also the crude oil inventories and all that. We did get those numbers. We're going to continue to get those numbers. But we're likely going to trade in here all the way through until we get deeper into the summer and then into early fall. And we'll see if the demand starts to spike for oil all around the world, and we'll see what the price does. And if they continue to cut the supply, like I've been saying, you're gonna eventually see the artificial move up on oil. It's gonna be forced up, right? So if that continues to happen, watch for oil to still make it to these levels up here. But as of right now, it's gonna consolidate in here, and it will continue to for quite a period of time. And I do see potential a move down to go after these lows down here, maybe back down to 66. But overall, I'd be hard-pressed to see it actually breaking out of this blue zone anytime soon. You may actually see something like this, where it does break down, and then eventually make its way something like this. So a really, really gross range. So if you're a range trader, oil might be the place for you. I'm just drawing nonsense now. But in the end, it's going to be very stable price-wise within the zone until the demand starts to spike, while supply is going to be cut, or exports for that matter. Okay. All right. Next is gold and silver. Gold and silver. So gold is finally breaking into the range, into this the zone I've been talking about. So finally we're seeing that happen, and we're likely going to see it move down through it here, and it's probably going to trade within here for some time, kind of like how my doodle's showing. And I do think the trading in here may have a bear bias. That's why I do have the downside move here potentially coming to go after these lows down here, or at the very least come after the imbalances here. We have the fair value gap right here, this bullish fair value gap right here. We also have another one right above it as well. And I do see price probably tapping that shortly as it comes into this zone, tapping the top side of it. So we have this liquid zone down here as well as this high pivot. So I would look for gold to get down to this area, and then potentially we may get some bullish bids coming in from there. But while we're in here, I would be a little skeptical getting too bullish, at least without tapping down here. Okay, so I do see this being tapped at the very least. All right, but overall, gold's been following the general idea. We can take away some of these fair value gaps, some of these levels. We get rid of this, we'll try to keep the charts as clean as we can, and I'll still keep this doodle here for now, just to have it as reference. But in the end, gold's been going overall pretty well. Next is silver. So silver breaking down as well, like I thought it would, coming down towards this ascending trend line, but really back down towards like 21.3. I do see it coming to 22. I do think you'll see like a pop in 22. I do believe that you'll see like some demand coming in from this consolidation here, right? So 22 area, 21.9. So you will see some consolidation here, but it's very likely you're going to see a move down to 21.3 and eventually down towards 20.592. So really my ultimate level for silver to get to is going to be right down here in this bullish fair value gap, so around the 21.5 to 20.787, which is within this general zone. It's very likely not going to hold this trend line. It's not designed for that. Okay, this trend line is not a long-term trend line, and this upside trend line is also not, like you're seeing, it's breaking through. This was just a structure that did not play fully out, did not mature into it didn't validate essentially, but we kept it on the charts because I wanted to show an example of it doesn't matter. The trend lines still have a place on your chart. Okay, so like even when it broke out through here, right, this rising wedge idea was done, right? Then it came back into it, and what did it do? It still respected the bottom side of this trend line here. So that's why I want to keep it on the charts. Broke out again and still respected the top side of this overall trend line here, and then finally it's breaking through. So I just want to keep it on the chart as an example, but as we come further down, in my opinion, and we start taking this trend line out, then we'll start removing these trend lines. But point is, we're likely going to see silver breaking down a little bit further, going down towards the low 21s to the mid to high 20s. All right, so now let's take a quick look at Bitcoin, see how Bitcoin's doing. We'll pull up the chart with all the data on it. So let's go here. Yeah, so Bitcoin still looking pretty solid. Had the beautiful breakout from this structure here. So we're still sitting long in the lemon garden on Bitcoin and a bunch of other positions. And so far we're looking to see a consolidation begin here, right? So what I'm looking for is for the daily candle to close potentially around here, but mainly within this wick right here. Okay, so within this wick here from 30,800 to 29,985, trading within there. And then as time goes on, we should see price action essentially trading in this sort of structure where we're going into a sideways action, maybe even slightly to the downside, and then we want to look for an eventual continuation from there. Okay, so we could be looking at Bitcoin getting back down towards the 29s, maybe 29, 28, 9, around there, like sub 29. But it's more likely, if we're going to have a really bullish, momentous move, we're likely going to hold this imbalance here, and we're not going to visit back down here. Okay, if we were, let's say we close this candle like this, like a doji, and then tomorrow's candle is a bearish engulfing, so we break down kind of like this. Okay, let's actually clean this up so it's a little clearer for you. If we have tomorrow's candle do something like this, and then we kind of trade our way down, we come back towards like the breakout, the breakout level or the structure, doesn't mean it's bearish. What it does mean is this move will have a lot more building to do that will probably take far longer, maybe even a good chunk of the summer to reach towards the mid 30s. I don't see that personally happening. I do think that it's more likely that we will have a pullback coming into the 29s, low 29s, maybe like 28.9, 28.8, and then pulling, rounding out there and pulling back up, going for those 30 levels. And those 30 levels will likely be a major place of consolidation. Whether it's continuation or not, we'll have to wait and see. But we are likely going to make our way at least back towards the bottom side of this monthly bearish fair value gap. Okay, at least tapping the 32s, the 31s, but in my opinion we'll probably trade into it going into the 34s, 35s, and maybe even higher. Okay, so I'm still bullish on Bitcoin specifically and crypto in general, but we do not want to get too bullish. Okay, I'm not calling for all-time highs or anything, but we are, in my opinion, looking for the next continuous leg up, and we've started it, in my opinion, and I think we're going to continue to see it. Now, before we head out, I want to talk about a couple other positions. So SHIB, we actually closed this today. We made some good profits off this, just under 20% profit off this. If you're a premium member in the swing trade service, you got to benefit from that. So essentially, we closed right around 808. It was a pretty good trade. We got in down here, so it was pretty good. It was pretty solid. I did miss. I unfortunately got into the fair value gap while I was asleep. So by the time I saw it, it was it was too late. This was my ideal exit. So we did leave some money on the table, but overall, very good trade. Very good trade. And overall, this month has been extremely solid, considering what happened this month. So looking over what happened this month, we actually had our first loss this month. We broke the winning streak since Luna Classic back over here, where we lost 72% on a 5% position. So this was a pretty big loss percentage wise, but on the account it was pretty small, thankfully. But this was the last loss we had until this month. On TON, we had a minor loss of 2.88%, and we actually had a break-even trade on Algorand. So it was a tough month because of the SEC, but I'm also pretty happy with the month because it gave us a lot of opportunities to buy into better positions in some of these trades, namely SHIB and STX. Again, STX was a pretty monster trade as well. Very, very nice trade. Worked out really well. We closed it off of this candle right here. So we did leave this candle on the table. We did leave some money on the table, but like I said, it's okay if you're gonna never catch the top or the very bottoms. You just want to be consistent. So we caught near the top, closed out near the top of this candle here, and banked in 22%. And now we're in a bunch of other positions that I have really high hopes for. A lot of them are already in the green. Some of them are break even. Some are slightly in the red. So we're in a really good spot, in my opinion. And I think that if you're a Lemon Garden member, a premium member for the swing trade service, I think you're feeling pretty good, considering most of the positions at this point are either break even, slightly in the red, or if you have Bitcoin, are really nice in the green. Okay, so this month is looking really good, and I'm looking forward to seeing how the quarter closes out, and I'm really looking forward to Q3, especially in my opinion. I do think that we are looking at a more bullish summer than most people think, especially for crypto. So I am looking forward for that. And I think that's it. Again, my bias is to the upside, but short term we might see some pullback here. We'll pull back here on Bitcoin, but my bias is more upside in crypto. Okay, guys? So before I head out, again, if you want to join any of the services, whether it's a tutoring service, swing trade service, or my day trading room, we do day trade everything, but right now we're focused on Forex mainly because we're focused on getting people funded. We got someone funded already, and hopefully we're on the verge of getting someone else past phase 1 for FTMO. So pray on that. We're very, very close, any day now, hopefully. So if you're interested in becoming a funded trader, or you just want to day trade in general, we'll do cryptos as well. Check that out. You'll find the service in the Discord, or you'll find it on the Patreon to get more details there. And remember, guys, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.